I think markets had priced this in already with the CPI data in hand and the PPI data in hand. We can make a pretty good projection of where PCE should come in. And we did expect the headline to be down a tenth and the core to only be up a tenth. So this number really wasn't a surprise to us. And if you do the implied CPI forecast from market prices, they're looking for pretty soft inflation over the next 3 to 6 months. So I think the markets had largely priced in this number. As we all know, they're looking for about twice as many cuts this year as the Fed has planned, so I think this was a status quo number for markets.
That might be status quo. The durable goods orders, as Katie pointed out, not so much. It came in significantly higher than expected, and I wonder if on the margins there's some anxiety that it seems sort of incompatible that we could get ongoing, better than expected growth while still seeing that disinflation that everyone's been hoping for.
Yeah, there's certainly a limit to that, right? So far, the narrative is that the economy can cool, growth can remain modest or moderate, but away from recession, and we can experience both moderate growth and disinflation at the same time. That's our view. I think that's the Fed's view for sure. And why they've shifted to, say, a more balanced reaction function between bringing inflation down and wanting to support a soft landing. But you're right, there's a limit to that. There is a risk to shifting to a dovish stance now and coming out of the December meeting and tilting the outlook towards rate cuts, because markets have reacted quite quickly and financial conditions have eased. So the risk is that maybe you gin things up too much and you don't make as much progress as you want on the inflation front. So no free lunch in that regard. We think the Fed's in a good spot. We do think rate cuts are coming, but you make a good point. Too much easing in financial conditions could ultimately mean inflation is stickier to come down or maybe even rises a little bit and kind of puts off some of these rate cuts that the market is expecting.